So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Here we go. No trade calls, recommendations, or response with our own stuff here for educational purpose only. Let's do this. So, guys, no questions off limits. Ask away. As I said last month, I'm gonna try and do these every month at the beginning of every month. So if I ever forget, please bug me or send me an email or hit me up on Twitter, tell me. But I'll try and do these the first week of every month. Naturally, we do these every day in the webinar, so you're always more than welcome to join us there. Markets are moving. Picked a good time to do this. So if you guys hear beeps and stuff going on, I'm trading, so I might be a little bit slower than usual because got a lot of stuff going on here. But no copying out. Said I was going to do it. Let's do this. So guys, shoot. Happy to discuss whatever anybody wants to discuss. I have no preference. So if nobody asks any questions, I'm going to shut it down straight away. As long as people keep on asking questions and stuff to look at, I'll try and keep going. So I don't have any particular agenda. Shoot. Yeah, well, I mean, Russell clearly is one of the most interesting things here. And we've been discussing this for a while, right? And what I said coming into this week, right, the way the Russell was trading is that we're going into a multi-confluence zone. Lewis, sound okay? Into a multi-confluence zone where you'd have to be looking to the short side, right? That's the only thing that's really interesting to me in this context, right? And we had a couple of things coming in line, right? Forget the fact that we're about 40% above the 200 moving average. You know, who cares? We could be 50%, 60%. It doesn't matter. Stuff can remain irrational longer than you can stay solvent. So that wouldn't be my focus, right? But clearly, as we are stretched, right, and as we've gone to 1, 2, 3, 4, 5, 6, 7 positive days in a row, clearly you'd be looking for some kind of a pullback. And this is the classic kind of action where you're getting close to seeing a down 3 to 5% day on the Russell, right? Having said that, what is interesting here? What's interesting is we're going into February, right, which is already seasonally a weaker period, right, in terms of the seasonal count. We're going into February, number two, February in, if you're looking at in terms of presidential cycle, right, after the election, it tends to be heavier than usual. We're going into OPEX here. February OPEX, even though recently it's slightly different, but overall tends to be a weaker expiration cycle. And last but not least, we're also going into President Day 3-day weekend, right? So next Monday, markets are closed. And usually we trade heavy into and out of, so Friday, Tuesday into President's Day. So all of this is basically pointing to the fact that there are a lot of things, a lot of confluence coming in line, right? That give us more conviction to try to look for the short side, right? That's all. So here, also interesting today, I talked about it. We were discussing this live in the webinar, and what I talked was basically about the importance of these previous highs here, and you can see this right where we got capped and market was and we broke through. And what I said is, as long as the Russell holds above here into the open, there's no point trying to stay stubbornly short. This is not the kind of dynamics where you want to short something, you want to short into strength, but you want to look to short weakness, right? Because the same way it goes up, stairs up, elevator down, you could get a little bit of an air pocket hit. And here, if you look at this kind of structure, if we break this move, what would you expect? You would expect the market to go quickly back into these lows, right? Now, probably not as quickly as it did now, but still, that's what these what the market can do at times is it can increase velocity of move. But usually 9 times out of 10, even the velocity of move will trade within key support or resistance zones. So here, so far, the Russell's done exactly what you would expect it to do, albeit a little bit quicker, right? A little bit quicker. So here, what you want to watch for on the Russell, and here we're down about 1.8, 1.9% off those highs, is how we behave now the rest of the day, right? You see how we're into this zone. What happens here? Are we going to get buyers supporting here? And at that point, you could easily see a dead day where we're stuck between these highs and these lows and we just hover here and do nothing. If we get through the next turn of the hour, and if we get through European close where the Europeans go away for the day, and you start to see this ripping, don't be surprised if they try and jack this up all the way into those highs. However, on always three options, up, down, and sideways, on especially after the turn of the hour, after Europe has gone home for the day, if we attract new sellers below the low of the day so far, then you would expect this to have a far bigger correction, right? Back towards, to 2200, something like that, right? And if you look at it on the daily, that's slowly bringing up that 10-day moving average, this previous high, right? This is all coming up there. So this is what you would be looking for, right? And also that's probably eyeballing it, a 50% move of this recent ramp. Let's try and fib it. Lows to highs, there you go, right? There is some method to the madness. A to B, previous highs coming in line with a 50 back. So here what I would say is the key data point is the low we just hit and the market is bouncing from. If that holds, it could be much to do about nothing. But whether that gives at any point today or even overnight, then you would expect this to accelerate and come back into the 50 back of this move high at the very least and come back into the 10-day moving average. And off those highs, that would give you basically, 5.4, something, as we said, exactly what we said as of the beginning of the week. We expected to see a day here, coming into this president's holiday where Russell, we see a down 3 to 5% day, and wouldn't be surprised with back-to-back down 3 to 5% days, right? That's what I would be looking at for the Russell. Aussie, Aussie, interesting area on the Aussie. Really, in this context, I'm very, very focused on equities and crude to a certain extent, not so much on currencies, but there are some interesting levels here on the currencies. Here, what you see on Aussie is essentially we're kind of stuck here, right? We tried to pull back down, and the market is reversing exactly where you'd expect it to reverse, right? And here, chances are, if we start to see the moves, especially because these commodity currencies have been trading a lot more with risk rather than necessarily with a dollar. And here, this is a key day, right? Negative close on the day here. You would expect to see this to continue this move down, right? All the way back into that confluence zone of the 10-day, the 50-day, but you would expect it to potentially try and get some traction for a move all the way back into the 75.00. Again, I think the moves on a lot of the FX pairs can be a little bit trickier, but right now what I would be watching like a hawk is especially, also what is happening on the bond side, right? Yeah, I mean, here it's essentially the if you're talking about, hold on, DXY, give me a sec, I need to adjust the trade here. Yeah, if you're looking at DXY, essentially you see what's happening, right? And again, if you're looking at DXY, essentially you're looking at euro, right? So you'd want to focus on euro. You can look at yen, Swissy, but it's basically euro you're focusing on. Hey, Andy, lovely to see you. Hope everything is good. And what's happening here on the DXY? What we said is basically this is the make or break area for the week, right? So we've been structurally bearish on the dollar for a long time. And then, when everybody started to get uber bearish, we got long for trade. And what we said is, we're looking for this to come right back into the 100. And we said here, this is a particularly interesting zone, especially with this reversal at the 100, because if you're looking for a healthy market move, whether you're a bear or you're a bull at this point, you're looking for it to come back down, right? So this is probably the easiest leg of this move, what we've just seen. And now it's decision time, right? Now it's decision time. And, incidentally, this is also the 50 back of the move from lows into highs. And what's going on here, right, is market is looking for direction. And today is going to be an extremely key day, because what you'll likely see is if the market can put in a positive close or hold this 90 mark, right? This could just be that little correction for the bigger move higher into, 93s, 94s, the 200 DMA, where we expect to have much better opportunity to sell the dollar, right? Hey, Peter, how's it going? Sell the dollar. However, if from a day close perspective today, you don't get this 90 mark hold, right? This 50 back 61, so then this could have been it, right? This could have been the correction on the dollar, and that's it. And we resume lower. We go lower. Euro resumes back into 125, right? Everything. So that's why today's really, really important. And what I was trying to explain to some of the guys in the webinar today is that right now, this leg has been extremely technical and very, very clear. But unfortunately, today, as we stand here, technically looking at this chart, we really don't have enough information to be confident about having a good read on the next leg of the move here, right? So to me, it's all about, again, if I'm just talking about the DXY here, how we close today on the day. Now, I know I'm saying if it closed positive, people are saying, you crazy, how could this close positive for the day? We don't know. The day hasn't really started, right? So, but what I'm looking at is, again, positive close on the day. This is what I'm looking for. Negative close on the day back below this area. This is what I'm looking for. And as long as we're hovering here, again, I can look at tactical opportunities in FX. I can look at things, but it's very, very tactical. And it doesn't mean there's no trading opportunity, but it doesn't give me information or input on trying to read the bigger moves. Not that you have to, because you see what I mean? And essentially, if you go back on the Euro chart, mirror image, right? Highs to lows, A to B, where are we? You see exactly mirror image like the DXY. We're at the 50 DMA and this 50. Make sense? If you look at USD JPY, let's see if this job. Move from lows to highs, A to B, here, 50 back. If you look at Swissy, it's going to be the same thing. So you see, it's the same chart across the board, right? Don't make it, don't make it harder than it should be. That would be my message. It's the same chart. And again, there have been beautiful trading opportunities across the board, right? But right now, we're just kind of a little bit in limbo. Yeah, I mean, DAX is struggling. I mean, a lot of the other indices are in similar situations. The DAX is kind of struggling here at highs. We had that negative close on the month and it ripped higher, Peter, but that's the same dynamic on everything pretty much, right? Negative close on the monthly on ES and we ripped higher, right? It's actually the same chart across the board. Now, what you're seeing here again on the Dow is that, sorry, on the DAX, is it didn't manage to get quite the momo the U.S. counterparts had, especially, situation in Germany is not that great, but it's still kind of stuck here. But really, to me personally, unless you're trying to put on a pairs trade, yet you're trying to do something, I personally don't see a lot of reason why you would be interested in trading DAX, CAC, FTSE, IBEX, whatever, when you've got such pure locations and areas on the U.S. indices, right? Makes a lot more sense to me. Tesla, what's going on Tesla? Tesla, it's a tricky one. Now you've got essentially you've got that big Bitcoin exposure. I think Tesla, to me, it's interesting the fact that it hasn't really, despite all the pumps and despite the recent news, we haven't really gone anywhere. We're stuck here. To me, this is an extremely interesting short this year, but unless not for the fate of heart, and probably not ideal to have it on as a naked short. What I talk about a lot, I like having this short against real company with real earnings, stuff like that. So, I'd like longer term, I'd like staying short Tesla against Apple long, right? Long Apple, short Tesla, probably my favorite pair. It's interesting. Today, Tesla's down almost 4%. Apple's down, 0.5. To me, it's a nice trade to have on. Similar to the short Facebook, long Apple. That's a beautiful trade. The trade that keeps on giving it. Do you have it here? So. Hey. How's it going, Debbie? Yeah. So again, Peter, did I answer your question? Yeah, I just ate. Yeah. So again, interesting location. I mean, it'll be interesting to see today how FANG closes. Right, we're kind of still stuck at these highs here. But again, it looks like, FX is still kind of in wait and see mode. I mean, you have a lot of charts which are at fairly interesting inflection points. But remember, actually, I think last month when we did this webinar, we talked about Kiwi and that a very nice resistance zone on the monthly, and we'd be looking for shorts here because we had the confluence. Debbie probably remembers, right? In this 100 and 200, we'd expect it to stall here because it actually gone cocaine angel here. And we did get a nice stall right at that level, but here it's just not doing much. I mean, you can see here at the weekly, it's choppy. You've got a lot of wicks to the upside, so unable to attract new buying at highs, but equally these wicks to the downside, so not really attracting new sellers at those lows. And it's kind of stuck here. So these are kind of dangerous situations because, if you want to, if you're structurally or your bias is to be bearish, you can talk yourself into a very bearish stance here. If you're bullish, you can talk yourself into a very still stay bullish. Bottom line is you know your risk, but I really don't like these kind of triangles because on the breakout, you've got much stronger resistance here. On a breakdown, you've got much stronger support here. So I'm not a huge fan of these choppy zones, but you can't argue the fact that you're at a key inflection point here, right? Also, if you're looking at Aussie, also very interesting zone. That monthly close on Aussie is still holding. And as we discussed earlier, it's in this interesting area, but it's very, very messy. You've got Euro JPY, which is at a very interesting juncture too. This is the famous or the infamous 127 mark, right? It's just kind of stuck there, and it can't really get any traction. It's been toying with this area for ages, right? And just can't seem to decide what to do. And likely this is all just going to boil down to what happens on equities, right? GBP USD, cable ramping up like there's no tomorrow. Crude still very much bid. So again, I think here the focus is on equities, but the way everything's grinding higher, everybody's levered up, everybody is long, everybody is margined out. it just points to the fact that we're closer and closer and closer to having, something like a 3 to 5% down day, or at least a 5 to 10% correction. Does that mean we can't go higher? Absolutely not. The quicker and the more aggressive the correction, the likelier it is that the Fed or whoever steps in and it ends up being a beautiful buying opportunity. But right here, right now, it's very tricky to have an awful lot of conviction wanting to chase the upside, right? ZN's here, stuck around this area. We've been discussing this a lot, and we said essentially you want to know what happens around the 137, right? And as long as they hold below the 137, you're likely going to continue to see a lot of selling and this trading heavy. If we start to see it close back above that 137, then would not be, not what I wanted to do, would not be surprised if we see this try and make a run for the 138, 139 zone. But right now, this is decision time, right? And you see it's the same thing as it is on the dollar, right? Today's close is going to be extremely important, right? Today, there's some painful action if you got stuck the wrong way on the bonds, but this is really key. We're not even kind of halfway through the day. Are we going to stall here? Are we going to power up and close above the 10-day? That would imply that we're going to get a rip back. Do we see some more selling coming into these as soon as Europe goes home? And does that mean that we trade back below here and we close negative on the day? The picture could change very, very drastically, right? So it's really tricky to have an awful lot of conviction right here, right now. Also, one of the other reasons why I'm saying that the day hasn't really started is not only because we're not even halfway through the day, but we've also got Powell speaking later on. So it's really tricky, right? And you'll probably see some short-term traders later on in the day start to lighten up on some positions, take some profits off the table just ahead of Powell. So don't get stuck in any knee-jerk reactions. But again, nothing really substantial has happened today that would lead you to really change any of the views we've been discussing, really. Yeah, I covered at the beginning. To me, the most interesting chart is Russell, right? Looking for some kind of pullback on the Russell, but everything is trading pretty much in sync here. We'll have to see what happens with Powell, how whatever he says or doesn't say affects the dollar. Yeah, you've got copper going for the break. This is going to be another interesting one, right? You see this from the bigger picture. Very hard to be ultimately super bearish, right? When copper is behaving like this, right? So how are we going to close the day? Is it going to hold the break up or not? But you see, it's a similar kind of action across the board. Yeah, Euro is interesting. I mean, if you look at Euro on, so you've got a couple of things going on for Euro, right? You could see here you've got the 10-week moving average here. You've got the 50 back of this move down here, right? And also, if you look at it, how it traded today, you see that nice little 4-hour reversal. That was when the BOJ hit the wires today. And I tweeted it out and just dollar turned against everything. And then, with the CPI print, everything changed. But it looks like it's trying to stall here, right? It looks like we're trying to see these moves where, dollar is going to firm up a little bit more, etc. And with that, especially with that BOJ comment, stocks coming off a little bit, and then the CPI erased everything. So here we're kind of in a wait and see scenario, But as I said, it's the same chart across the board. Euro stuck at this 50 back, USD JPY stuck at the 50 back, Swissy stuck at the 50 back of the move from, let's see, is it going to work? I'm drawing it the wrong way, hold on. See how it's a 50 back here? So everything's at a very, very similar zone. So now you have to be, you have to be comfortable with this kind of wait and see scenario. And the day closes will be interesting. See ES. And again, nice action also. You see how it just stalled right coming back down, but structurally from a bigger picture, it's hard to argue. It's not even looking like a flesh wound yet. Nothing's happened. But what you want to keep in mind, again, when you see this kind of action, and we talked about it today in the webinar, and you start to see all these gap ups, cash market, the play is for those gaps to fill, right? And here what you could get is you could get a situation where we hit an air pocket off those highs and we fill all these gaps, right? We have that 5%, 5 to 7% correction, but look at where that takes you from the bigger picture, right? Let me just make this smaller. Even if you have that, not even the tiny, this is still very, very bullish, right? Extremely, extremely bullish. People who like to draw lines can draw all kinds of lines here, but it's still not a bearish chart, right? It really doesn't look like a bearish chart. It's, you can look at it all you want. It just doesn't look bearish. NQ. Does it mean that there's no froth in the market? No. Does it mean some of the moves aren't silly? No, but don't worry about the moves. Who cares? The move is what it is, right? Just try and trade them. Also similar with the NASDAQ. Yeah, URA is trading nicely here. We're still on the trade, haven't changed here, or it's getting close to some initial profit targets. We're looking at for a move into the 20s as more of a neutral level, right? Our primary target for the year is to see a move back towards the 40. Anything above would be what we call extension targets, but this moves. Yeah, we can't complain here. This one's been moving very, very nicely. Yeah, YM also, it's stuck here. It doesn't look like it's the end of the world, right? You just had a little bit of an air pocket hit. Now, very similar to what we discussed on the Russell, kind of. See how this is such an important point. As long as the dips get bought, as long as these previous resistances here act as support, your base case assumption has to be that they're going to try to continue to grind this higher. Now, the moment you lose that, it gets interesting. But right now, it's just two-sided, at least we're seeing some two-sided trading. It's interesting, but nothing fundamental happened today. That's the main point, okay? Any comments, any questions? We've been going for 29 minutes. Any comments, any questions, any chart we haven't looked at, any chart anybody wants to look at? More than happy to look at it. If there are no more questions, no more charts, we'll call it a day. Gold, what's going on gold? Well, gold's stuck here, right? Not a lot. I mean, if you're bearish, this is not a bad place to sell some more. But essentially, we talked about the fact that if you were bullish and it felt like a lot of newer traders got caught, right? Um, uh, and being long at highs. And essentially here, you have to pay attention, and you see how from this smackdown, you see how you're getting serious selling, right? Serious selling on. So in the same way that you've got serious selling above the 1900, it's struggling a little bit to find new sellers below the 1800, but it's kind of stuck here. And don't forget that from a bigger picture, whether you're looking at it on the weekly or on the monthly, this is an ugly failure. So I think you have to entertain the possibility that, as we said on everything, this is an extremely important point. And as long as we hold it, we could continue this rotation higher, especially if the Fed cooperates, right? But if we can't hold the 1800, then there is no reason why you shouldn't be looking for this to correct back towards something like the 1600, even though I know it sounds like heresy to some people. But, it's trying to support here, but if it loses this area, it could get ugly. See what I mean? Bitcoin. Yeah, I mean, what to say? What's your question? What can I say on Bitcoin? You've been in these for ages, right? For a while. If you're holding, you're holding. It's really hard to, I don't know what I could possibly say. I wouldn't want to be short, and I wouldn't want to mortgage the house to buy here, but I'd be buying on dips. I'd be managing my exposure. But here you have to be careful, right? Because I mean, here the key difference here is that you see those dips, those flushes every now and again. That's probably just leveraged players trading 100 to 1 leverage, that just get hit, right? That get hit over leveraged on exchanges. But with all the things that are happening, there's plenty of institutional demand to just consistently keep on buying this. Now, does it mean that there isn't going to be a flush? Absolutely not. But, you have to be ready for that kind of flush, especially if it coincides with something which is kind of like some kind of a VAR shock or a general de-risking in the market, because what happens to correlations, they tend to go to 1. So everything gets sold, whether it's Bitcoin, gold, stock, whatever, people need to raise cash. So, but all those things, if you're already long, you should welcome those things as buying opportunities, right? But that and same thing with BTC or ETH, right? It's exactly the same thing. But, apart from that, it's hard to say much. Yeah, crude here, I mean, essentially there's just two numbers you want to look at crude, and that's 60 and 55. And, anything on approach to 60 is an interesting opportunity to try and sell. And anything, and that's your range, kind of where we're stuck, inside that 60 to 55. It's really hard to fade it here. We shorted in the webinar today, took some off, got a couple of TPs off, but it's kind of stuck at yesterday's range, not doing much. But it's coming into, a lot of overhead resistance. But if you're, see here today is just kind of stuck, right? Yeah, you'll get a lot more of that, Debbie. Also, social security number for wallets and stuff like that. So here, crude's kind of stuck. It's kind of stuck, caught in the crossfire. I think here it's all about equities, right? You just want to look at equities, and as long as the equities are continuing in this grind higher mode, then you'd have to expect more of the same across the board. But the more this plays out like this, Peter, the more you'd expect that we're getting closer to some kind of volatility, Volmageddon kind of event, right? And maybe I'll close the session the same way I started it, saying that all things being equal, we're going into a phase here where whether you're looking at normal seasonals, it tends to be a weaker period for the market. Whether you're looking at post-election seasonals, it's a period which tends to be a little bit weaker for the market. Whether you're looking at holiday calendar with President's Day, it tends to be a weaker period. If you're looking at it in terms of OPEX, February OPEX tends to be a little bit weaker. So everything would be pointing to the fact that you'd want to be more cautious on the long side. That's all. Okay, guys, thank you so much for stopping by. That's 36 minutes. I need to get back, manage some trades. Wishing everybody an awesome rest of the day. Thank you for stopping by. And we'll do this again next month. If I forget, just somebody remind me. I'll try and let's see if we can do 12 this year. Okay. All the best, guys. Take care. Bye-bye.